Hello and welcome to Ask You for a Trend. I'm Josh Lipton, and for the next half hour, we're going to be breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. It was a roller coaster day for markets, ending with the major indices surging to finish the week, all closing near session highs. Despite the positive finish, though, to February, markets still closed the month in the red. We'll dive into the rest of today's market trends straight ahead. Then SoundHound AI just reported its strongest quarter on record. I'm going to sit down with the company's CEO to find out what is next. Plus, a downturn in consumer spending means a spike in foot traffic for discount grocers like Aldi. We're going to explore the current grocery and retail landscapes. Well, Bitcoin is slumping and moves in China. We're looking at the trading day takeaways with Yahoo Finance's Blikre. Jared.
Well, we did have kind of a February fallout here, and let's just survey the damage. We had a bit of a rise into the close on the last day of the month, but S&P 500, worst month since December. That's not too bad, December of last year. NASDAQ Composite, though, you'd have to go all the way back to September of 2023, and then you get to something like the Dow, the Russell, the S&P 500, and the equal weight. That's also December of 2024. Not so bad, but then you get to Bitcoin. We're going to cover that in a bit. You have to go all the way back to 2022. So I actually sat down with Michaela Galina over at Wave HQ on the latest episode of Stocks in Translation, going to hit next Tuesday, and we were talking about risk management ahead of this and in spite of in the midst of everything that's happened. Here's what she had to say about the psychological factors.
We all face these same issues. The three that I really pay attention to are loss aversion, recency bias, and confirmation bias. I think loss aversion is fascinating because it's essentially the concept that we feel losses as an investor at 2x the rate of the emotion that we feel joy when it comes to gains. And there's fascinating neuroscience about this. The neuroscience actually tells you that when you feel a loss as an investor, the same part of your brain that lights up when you feel physical pain lights up.
So if it feels like a gut punch after this month, that's understandable. So that's where we land, but we head into March.
So exactly. So February, rearview mirror. I was going to ask you March. Things pick up. What do we know?
Well, I was just presenting this map of the entire year, 2025 seasonality. If you look at this green line here, I'm not going to spend too much time on it. We almost have perfectly traced out what has happened, what we thought was going to happen. We are right down to the zero line. We are flat for the year. Unfortunately, March tends to be a little bit negative with this map too. I blew this up, and it's the white line right here. So we go up a little, then down a little, then we close just under the waterline for the month, for the mark. And then I also have another seasonality map. This one is going to be more common. This is the average since 1990 instead of 1928. This has us going a little bit higher after an initial downturn. We'll have to see what happens, but the white line is the one that's been working this year, so that's kind of my base case.
All right.
We got to move on here, and guess what? But China, because China was a huge story this month. It was a green story. And to be fair, we had some other green in the markets. We had bonds, I believe gold too. That's another market we could look at. But we want to look at China here. And this was led by Alibaba with gains of 34%, even after a 10% decline the other day. Still really leading as far as the other mega caps of China go. And it wasn't just Alibaba, it was some of the other Li Auto here up 31%, Xpeng 41%. So those are the auto trades. But let me show you the 1 year. Alibaba up 79%, so that's not bad. Some of these other names have had some troubles, but it all gets back to what happened last September with the stimulus announcements. Are there going to be more? A lot of the price action here is just kind of predicated on the China growth story re-emerging. But we're going to need some more catalysts probably from the government.
Yeah, I had investors, I had strategists on the show. I remember actually telling me China was uninvestable, Jared.
Yeah,
uninvestable.
Well, a lot of people have said that, and I've said that myself because can you trust the PBOC? Can you trust the government over there to not undercut the capital markets as they have done many times before? So we'll have to see. Final point here. Hammer time. And what does that mean? That's Bitcoin, and I do love a good hammer candle. I'm going to show everybody what that is in just a second here. Let me punch up Bitcoin because we had the Bitcoin in free fall yesterday, and it might be a little hard to see. This is the candle that we're looking at today. There is a tail. It's also called a wick that extends all the way down. Let me show you. We have this magical 200-day moving average. Just touch that. It undercut that 200-day moving average, but it's no surprise that's where it stopped. Now, I was on the show yesterday, I was looking at volume support. So we have volume support a little bit lower than that. I've said this thing is probably going to 70,000. I still tend to believe that. I think this is a pit stop. But for the time being, it is pausing here and it's at 84,000. I think investors can at least sleep at night, go home over the weekend, and well, it's going to be moving, so maybe you can't sleep at night.
I was going to ask you as we head into the weekend whether you're buying Bitcoin. That's what the people want to know.
Yeah, maybe.
Maybe. I'll take a maybe. Thank you, buddy.
You bet.
Appreciate it. SoundHound AI reported its strongest quarter on record with $34.5 million in revenue. That did mark an increase of over 100% year over year. And joining us now to break it all down the quarter and discuss what is next for the company is Keyvan Mohajer, SoundHound AI co-founder and CEO. Keyvan, it's always great to see you and to have you on the show. So listen, you reported, Keyvan, clearly investors like what you had to say. Your stock surged about nearly 20% in today's trade. Walk us through the quarter, though, Keyvan, and what you're seeing in the business.
Thank you for having me back. Great to be here. We had a record quarter. It was a beat and raise quarter. Almost $35 million of revenue, up 100%, more than 100% year over year. Also a strong cash position, almost $200 million of cash and no debt. So we feel really good about that. We heavily diversified our business. We provide AI for cars. We provide AI for restaurants. And now we are in retail, healthcare, financial institutions and insurance, government and military. And then we had a really big deal in a new sector, energy. We had a large deal with one of the biggest U.S. electric utility companies in Q4.
I'm interested, Keyvan, investors very interested in AI, excited about AI. You've been thinking about this technology for a long time. I have a technology question for you, Keyvan, which is as these AI models, as they get smaller, as they get more efficient, Keyvan, what does that mean for your company? I mean, how is that going to improve your products?
Great question. We actually made the prediction that models will get more accurate and less expensive and faster. Years ago, we said, just don't worry about cost. Just go and build these amazing user experiences and make them really good. Make them good enough to be able to go live. And as they get better, a lot of it comes from us. The products will get better, and that's happening. Compared to 2 years ago, we have a lot more models out there. Some are made by SoundHound, some are open source, some are third party. And our architecture taps into those models depending on the use cases. Sometimes there are smaller models that can run on the edge, run in the cloud. Sometimes there are more expensive models that are in the cloud, depending on what the user is ultimately asking.
Did you, Keyvan, when you heard DeepSeek's claims, some have been skeptical. What did you think? Did you believe all their claims?
Well, they actually made their model open source and put it on the internet so you could download it and test it. It actually was a good thing for companies like SoundHound because, again, we rely on innovation that happens within SoundHound and outside of SoundHound to make our products better. And that was a positive update for SoundHound.
On the business side, Keyvan, you've made acquisitions that have allowed you to move into new verticals. I'm curious, are there certain verticals, Keyvan, that are already seeing more traction than others? And how do you rank those verticals in terms of what you're going to emphasize as a business and as a CEO?
We spent 10 years building the technology, and in 2015 we unveiled it. The traction was great. We started in automotive because we didn't need to convince car makers to adopt voice AI, and then we went to customer service. We started with restaurants. We said restaurants to us are what books were to Amazon. Let's start with restaurants and then expand to other verticals. And then through organic growth and acquisition, we have been able to accelerate that expansion. And ultimately, we believe every business needs customer service, AI customer service, whether you're a large insurance company to a single location barbershop. And we are building solutions for all of those. So a single location barbershop or a plumber or restaurant, within minutes, they can have a very affordable AI customer service. And a large financial institution or insurance company or healthcare company can have very sophisticated AI that we collaborate with them. So we have a big range of customer base. Yeah,
I noticed, Keyvan, too, on that conference call, the military was mentioned a few times. I'm wondering if you could give viewers a little bit more color about the work you're doing there.
So ultimately, we provide voice-enabled conversational AI for businesses. I can't go into more details, but the great thing about our business is that it's very repeatable. So once you make it, you can sell it again and again it's the same type of experiences that we can sell to different industries.
And finally, Keyvan, you were in the news for a different reason, which was NVIDIA. Gave us some color on recent investment decisions they made in the fourth quarter, including, it looked like, Keyvan, exiting their position in your company. Any kind of insight you can provide on that decision?
Yeah, we have a great relationship with NVIDIA. We were in CES together. We had a joint demo in our booth that was very well received. We are also going to participate at the NVIDIA GTC conference in March, so the relationship is very strong. We have attracted investment from a lot of strategic investors, multiple automakers and cloud providers and device makers and chip makers. I can't speak to their investment philosophy, but in my opinion, they don't want to hold public company shares. They make these investments to create ecosystems and alliances, and those have been benefited SoundHound. In case of NVIDIA, we were able to use the investment to port our technology to their hardware and software stack, and that ultimately increased our addressable market.
Keyvan, thanks as always for taking the time to speak with us. We appreciate it.
Thank you so much for having me.
Stick around, much more Asking for a Trend right on the other side. Well, the Federal Reserve's preferred inflation gauge cooled as expected in January. However, the good news came with another potential red flag for the U.S. economic engine. Consumers pulling back their spending by the most in nearly 4 years, with shoppers becoming more spend conscious. Discount grocers like Aldi are seeing a spike in foot traffic. Joining us now is Naveen Jaggi, JLL President, Retail Advisory Services. Naveen, always good to see you. So I want to dig right into this report, Naveen. You have a new one out. You really dug into the grocery vertical, and that's where I want to start. When you all look into grocery retail vacancy, I'm curious, Naveen, what are the trends you're seeing there right now?
Well, I mean, first of all, the grocery sector is probably still the hottest sector in American retail today. And from the investor community, they're still looking for more and more of those grocery anchored shopping centers, whether they're anchored with a Whole Foods or an H-E-B or a Publix or a Kroger, et cetera. So we still see that as the most desirable asset class from an investor standpoint. The vacancy question that you've asked is that there's not much vacancy in a grocery anchored shopping center in the prime and major markets across the USA. And we're not hearing anything to tell us that that's going to change. If there's going to be any pivot at all, Josh, is that we're going to likely see the consumer start thinking more discount, more value, and more bang for the travel and the trip. So if you think about it that way, they'll likely try to get to a grocery store and get as much of their purchases at one time as opposed to making 2 or 3 stops. So the vacancy issue doesn't concern me at all right now. What really concerns me is that the consumer confidence index is dropping, and that tells me they're concerned about the unease in their broader economy foundations.
Can I ask you something, Naveen, about that, though? If there isn't much vacancy and you have, still elevated construction costs, if I'm a grocer and I'm hoping to expand my footprint, what does that mean looking ahead?
Well, look, you have to adjust your pro forma to the new cost of doing business. I mean, there was a reality that started sinking in between 22 and 23 that the days of cheaper capital, the cheaper cost of all the things that you do to build a store aren't going to come back down to 2019 days ever again, or not in the near future anymore. So where you had a pause in 2022 and 23, the reality is today, if you want to do a deal, you want to do a grocery store deal, you'll have to pay the current rate. And the current rate means that the cost of construction, the cost of labor, the cost of FF&E, all of that is higher today than it was 3 or 4 years ago, and you can't expect it to come down, which means your rental cost goes up, your occupancy cost goes up, which means over time that we'll have certain levels of inflation on certain products on the shelf.
What is the investment appetite right now like in this space, Naveen?
It's still hot. I mean, of all the major asset classes in retail, the grocery anchored shopping center is the hottest class in America. Now keep in mind, roughly 70% of all the investment sales in capital markets for retail in 24 came from the private client side, which goes to tell you that where institutions have been careful about how they invest their funds, the private capital, the family office, et cetera, are filling that gap. And so we're seeing a large pivot towards more and more investment dollars coming from the private side, which they're playing much more aggressive because they have a long mentality as opposed to a short-term mentality.
And Naveen, when you look at the overall grocery market, where's the foot traffic?
The foot traffic is high, certainly high in the major markets. We're starting to see in the Sunbelt markets. We're starting to see a little bit of softening in January, of course, in February, just because I think the inflationary environment that we're in is softening some of that foot traffic. And I wouldn't be surprised if we see some of that continuing as we start feeling that the consumer reacts to what's happening in Washington. And what we all know at the end of the day, Josh, is that the consumer reacts when the market is calm and when it's certainly able to estimate how it's going to behave. And right now, there's certainly sense that the market is not calm, the world is not calm, and when you have that combined, consumers start being more cautious with their dollars.
You know, we always talk about the consumer, Naveen, as if it's one consumer, but of course, you know, there's different kinds of consumer. Do you expect this sort of trend of a bifurcated consumer to continue, meaning the high end doing okay, but more pressure for mid to low income?
Yeah, I think we've seen that for the better part of 10 or 15 years now, Josh. Look, we have a barbell economy today. We have the value consumer and we have the aspirational consumer. But the reality is when it comes to food, when it comes to groceries, it's not too often you'll see someone go to a high-end grocery store. The reality is that the vast majority of Americans, nearly 80% of all Americans, shop at a similar grocery store. Whether you're in suburbia USA or urban markets, you're going to be shopping at a Wegmans, to a Kroger, to an Albertsons, to an H-E-B if you're in Texas, or to an Aldi or a grocery outlet or a Dollar General if you're on the value side. So the reality is, no matter what demographic you're in, you still need groceries every day, and you're sensitive to, and at least will notice when egg prices are up, when milk prices are up, and bread prices are up.
Naveen, always great to see you and have you on the show. Thank you for joining us.
You bet, Josh.
Coming up, we're taking a look at the Atlanta Fed's first quarter GDP forecast and our chart of the day. More asking for a trend that's right on the other side. A possible warning on the health of the economy coming from the Atlanta Fed today. Yahoo Finance's Julie Hyman joins us now with a closer look at our chart of the day. Julie.
Yeah, and this is something we've been talking about, or alluding to at least, all throughout the show today. What the Atlanta Federal Reserve has is something called its Nowcast, its GDP Nowcast. So effectively, this is a real-time GDP forecast that is updated frequently as we get all of the daily economic reports. And so what we saw after the PCE numbers this morning and the personal spending numbers this morning is a new reading come in showing a potential decline of 1.5% in GDP growth for the first quarter. Now, why is this of such concern? Most of the mainstream economists have been thinking it would be around 2%. There are two reasons that we need to put this in context. One is, as I said, this is something that is updated frequently. It's a nowcast, right? It's not a sort of a traditional forecast. We're going to get more economic data between now and the end of the quarter, including, of course, things like the jobs report. And so we are going to see this number updated. That's thing number one. Thing number two is that some of the data that we got this morning was about imports into the United States. That's something that seemed to provide a drag here. Those imports coming in part, according to economists, this is what they're theorizing, is that there's a surge in imports because of the anticipated tariffs going on some goods. So there also should be a normalization process as those goods then make their way through the economy. There might also be a normalization process in the coming months, depending on what happens with tariffs. All of that means this negative 1.5% is not likely to stay there. However, it was another reminder that there are these growth concerns that have been sort of plaguing the markets. Some economists we've spoken to, including from the Investment Company Institute today, say these are legitimate concerns. We should keep an eye on them. We also talked to Nancy Tengler about the ongoing debate in the market about whether there is an actual growth scare and or if there is a momentum unwind in some of the large cap tech stocks. She leans towards the latter. Wherever you slice it, this is a number you're going to be want to watch closely in the coming weeks as we get more and more data, because guess what? Market participants, institutions are watching this number as well, Josh.
All right, thank you, Julie. And that is a wrap on today's Ask for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all of the latest market moving stories affecting your wallet. Have a great night.